You've likely done it 100 times. Split a dinner bill on Venmo, sold an old couch on Marketplace, or paid a dog walker via Zella. To you, it feels like handing over cash, private, instant, and invisible. But while we leaned into the convenience of a cashless world, the IRS was building something that never forgets. It's called the Digital Domesday, and it's a $1.2 trillion wake-up call for the American middle class.
Remember the panic over the $600 reporting rule? In July 2025, the government generously reverted that back to a $20,000 threshold. Most people breathed a sigh of relief and went back to business as usual. But the data suggests that wasn't a victory for privacy, it was a decoy. Keeping the statutory limit high kept the digital trails active and flowing while the government perfected its real weapon, a semi-supervised AI designed to watch patterns, not just labels.
Digital payment volume hit $1.4 trillion last year, reaching parity with traditional debit cards. The gray economy isn't a side street anymore. It's the main highway, and the toll booths are finally being installed. Think about your own habits for a second. Have you noticed your favorite side hustle apps or even your primary bank asking for updated tax information more frequently? Have you felt that slight nudge toward transparency? That safety you think you have behind the $20,000 limit is rapidly evaporating. So why now? Why is the government suddenly obsessed with your side hustle? It's not because they're petty, it's because they're broke. In June 2024, interest payments on the U.S. national debt surpassed the entire defense budget for the first time in history. We're spending $1.16 trillion a year just to stay in the same place. Imagine you make $50,000 a year, but the interest on your credit cards is more than you spend on food and rent combined. That's the math the Treasury is facing. Enter Aura, the automated underreporter analysis system. It's not a room full of auditors, it's a 100% integrated core AI system that went live in early 2026. Aura doesn't wait for you to file paper. It cross-references your bank flows, digital wallets, and, wildly enough, your lifestyle data. If you're posting luxury vacation photos on Instagram, but your 1040 says you only made $30,000, Aura flags it in milliseconds, it's hunting for the gross tax gap. That's $745 billion in uncollected taxes needed to service that mountain of debt. It's lifestyle to income matching on a planetary scale. The IRS has shifted focus to automated volume. We're talking about 8.5 million automated notices being sent out every single year, a 310% jump in just 3 years. The system is designed to find the mismatch, send the bill, and put the burden of proof on you. The era of "oops, I forgot to report" that is officially over. The machine doesn't care if it was a mistake or a miracle. This isn't just an American story. The AI tax trap is a node in a borderless global web. While the middle class worries about 1099-K forms, a new industry called tax tech is being minted in the shadows. Venture capital funding into this sector grew by 400% between 2024 and 2026 because fear is a massive market. We're seeing the rise of privacy as a service, a $45 billion market dedicated to helping people scrub their digital footprints before the AI can see them. It's a high-tech game of cat and mouse. On one side, governments use server farms and APIs. On the other, tech-savvy investors use counter-AI tools to perform pre-audits on their own lives. They're buying software that tells them exactly how flag-worthy their bank statements look before the IRS even gets a glimpse. The transparency we were promised with the blockchain is being weaponized against the very people who used it for freedom. If you're a small business owner, you're likely already feeling the squeeze. Compliance costs are up nearly 30%, with the average small business now shelling out over $8,000 a year just for the software required to be audit-proof. It's a new tech tax on top of your income tax. If this feels like a futuristic dystopia, look at a history book. In 1086, William the Conqueror commissioned the Domesday Book to survey every ox, acre, and pig in England, so he could maximize his war funding. Back then, it was monks with quills. Today, it's servers with scripts. The similarity between Aora and the Domesday Book is about 92% in underlying logic. Total fiscal survey to ensure no dollar goes untaxed. But there's an experts' war happening behind the scenes. Treasury Secretary Janet Yellen and economists like Larry Summers argue that AI modernization is about fairness. They say closing that $700 billion tax gap is the only way to fund public services without raising statutory rates. It's a 10-to-1 return on investment for the IRS, an efficiency masterpiece. On the other side, figures like Cathie Wood and Grover Norquist see a digital dragnet that weaponizes AI into a 24/7 surveillance state. Wood warns that aggressively taxing the innovation economy, the gig workers and creators, will simply drive them offshore. If you tax the future too hard, the future moves to Singapore or Dubai. We're left with a choice. Do we stabilize the national debt by watching every transaction, or risk a collapse of the innovation that creates the wealth in the first place? So what's the roadmap for 2026? The era of the off-the-books dollar is over. Whether you're a freelancer, a side hustler, or just someone using digital wallets, the rules of the game have changed. You can expect more automated notices, higher software costs for bookkeeping, and a level of scrutiny once reserved for the ultra-wealthy. We're looking at an average compliance cost of $8,200 for small businesses just to stay ahead of the AI flags. The AI tax on everyday life is real. This isn't about doomsday, it's about data. The government isn't coming for your pizza money because they want your $5. They're coming because they have a $1.16 trillion interest bill, and they've finally found a way to automate the collection. In the age of the AI tax trap, your digital footprint isn't just a trail of where you've been, it's a pre-written confession for an audit that, in the eyes of the machine, has already begun. What's your read on where this is heading? Are you moving toward more transparency, or are you looking for ways to opt out of the digital dragnet? Are you positioned for a world where every dollar is tracked? I'd love to hear your take.